Welcome. It's the Market Roundup. Joe with you here. It's the 19th of September. It's Tuesday going into a Wednesday, which is a Fed announcement day. Let's get into it. Take responsibility for the outcome. You guys know how this drill works. I'm going to get through the meaningful news of the day. We're going to break down the markets technically, see if there's any sort of tradable pattern, and as always, share trade setups from the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
Moving into the market analysis, you're going to see that we came back from a pretty decent sell-off. I thought we were going to roll over and continue with what I saw on Friday. We'll get to the charts in a second, but about midpoint of the day here, let's get the daily news. It was just indecisive. And we did have a triple witching on Friday, but we've seen Monday and into Tuesday, these markets really not know where to go, and I do believe there's a lot of emphasis waiting for the Fed announcement tomorrow, not really their policy, I should say, what they're looking forward to. What's not going to happen tomorrow, but what's going to happen in November and December, things of that nature. All three majors look to be slipping below previous support levels at that point. So I was ready to hit my bear button, to tell you the truth, and we just turned right around. And sometimes it's kind of hard to trade on Fed days anyways because of that exact chance of movement. So let's jump into how we finished. 0.25% across the board on almost everything. Look at that. The Dow, the S&P, the Qs, the Russell, oil just flat as well, and gold flat. Not a lot of movement at all, and it really is. And I don't know if it's being overblown, folks. I know that the Fed has always been this controlling factor, and the markets kind of hold their breath. And then after the Fed does what it does, I'm not getting that scramble around that I'd like to see, or that follow through, or that panic. However, there are some telltale signs here. Signs here, I should say, of a little bit more bearishness than optimistic. Now, that's just me. Let's get to the advanced decline line. 60 declining, 34 advancing, 6% just kind of sitting there. But the below and above the 50-day moving average is one that I've seen worsen, even with some of these bounces. So let's jump directly into our first chart. This is the SPY. And where I was on... Oh, geez, it was so fun. I got to do the updates 3 days in a row. And I saw this candle, and I was hoping for, I saw this candle here, and I was hoping for a bullish move to the upside, because that would confirm a breakout of this symmetrical triangle pattern that I've been waiting for. I also said that day that, lo and behold, most of the time when it comes to Fridays, they can flip-flop, and I wouldn't be surprised to get a bear candle back into the same area. Well, the second part of that scenario did happen, and we did get that bearish candle. So I'm ready to hit all the bears I can. No follow-through on Monday. Look at this beautiful little psych out here. I was looking at some bears, getting excited, and I do love this volume. It is triple witching. Sure, that has a lot to do with all the options expiring on the futures and the options in general. But I like the candle. I like the candle. And if you really got a very, very tight... Boy, let me get rid of some lines and redraw this. If you do draw a very tight symmetrical triangle pattern across here using this area, then that to me was the confirmation below it. And if we do consider this support level, which I'm very focused on right now, you can see that so is the markets because of the shadow. I am definitely glass half empty. I have to be, because this was pretty quick to get below that line. Now, the Fed could do something surprising. Maybe they raise. They're not supposed to. I don't think they will, but maybe they will, and yada whatever, and that might just, be that little straw that broke the camel's back. There's other things out there. We have striking going on when it comes to Hollywood and the automakers. We also have a government that's playing with a shutdown thing again. You guys have played with that, remember? Back in the Obama years, we shut it down a couple of times. So there's enough out there to maybe trigger or cause an excuse to sell. But based on the markets here, folks, and I'm going to use the F word, it feels like it's going to roll over. And I hate using that word because I want to watch it roll over. We don't trade feelings here at Maverick. We trade what happens. Q's the exact same thing. It's got that same shadow. If you pulled up a diamonds chart, you'd see it. It's this level that I'm really focusing on. I know that we could really open this up to what we want to. If this becomes a double bottom right here, then yes, then that pivot point can extend this symmetrical triangle pattern and we can move higher. But what I'm just looking for is this previous support level that we set about a week or two ago, about 2 weeks ago. So at the heat map, pretty much the same thing, just this nice brown color to it. Nothing really went anywhere. Some went a little higher, some went a little lower, but it was just a flat day overall, not giving me any sort of confirmation of direction. Market outlook, I really wanted to go to monthly. I wanted to go to -1, but instead, and it's because of this shadow. Remember, right, folks? We just took a look at the chart, and it's this shadow. If this was a red candle here, guys, I'd be very happy at a -2 and a -1. But since it went all the way back up and has a hammer, which is a reversal signal, which means this could acknowledge. Let's see that the Fed does something like, "Hey, we're okay. We're not gonna raise this time, and we're not gonna raise in the future." Well, then, yeah, the markets could take off, and that would be a beautiful double bottom. So I have to keep this at a 0, the monthly outlook, and I am biased to the bear side, that F word again, right? My feeling is towards the bear side, so I gave it a 1.5. All right, well, there it is. I'm not going to trade anything until I see confirmation, but that's where I'm leaning towards. So on the potential trade side, I've just kind of taken away some of my bullish trades. I just keep the ones up that are showing signs of holding on. And I had a whole bunch. If you guys take a look at all of our end of days, there's a bunch of lists. So just because they're not included doesn't mean we still don't have them. But ABBV seemed to be the one that only really held on. Everything else is kind of like pulled back or broken support or rolled over. They're not in bear trends by any means. They're just not as strong as they were. G I had as a potential sideways. I didn't show it to you guys last week, but I'm going to show it to you today because it still has a potential, even though it's showing a little bit more bullishness. And then on the bottom are a couple more that I'm looking at to add, if not already, on the Bear Watch. One that I did like was Disney as it rolled over today, but Russell's is the one we're going to talk about today. So let's start with our bull. This is ABBV. And the reason why I kept it up forward and wanted to show it to you if you guys weren't in it already, I like this real good push. I believe this is the candle I was looking at when I first pulled it up with you guys. Boy, that's not straight. But I did like how it's actually holding on up at this level. So it's showing a lot of outperformance with this indecision. It's still not really breaking up to the upside or moving higher, but it is something that's holding in there. So I'm going to keep that favored. Sideways to up, if you already have this position with a diagonal spread, you're laughing, or a vertical spread, you're doing great. You're loving it. So just kind of hold true to the position. So here's GE. I didn't get to show it to you last time. But this is, I believe, where I was looking at. It was one of these 3 days. So I said, okay, maybe it can stay within this range. What I really liked about it was this support level. You could even make the argument of this area. And why that is because these kind of coincide with support levels. But a deeper support level could be back here in this area. So you've got this area where it could slide through and still turn back to the upside. And then obviously this high. Now, it has moved a little higher to the upside, so it might be a little bit more of a +1 than a 0. But you could give it whatever range you want. And if we do get bad news tomorrow, the markets roll over and G comes back down, it's right back within that trading range. So G is a pretty decent little sideways trade there. And then the Russells. I always pull this chart up to get the percentages of how it finished. But what I noticed was a pretty nice bearish pattern going on in it. So I do like this lower. We got this beautiful crossover which sets a lower high, just like that symmetrical triangle pattern we've seen. But look at this little consolidation. It didn't rally back up here at all, and it's rolling over. So nice little confirmation as it's starting to just kind of leak forward. It does have support here at 180. You can see back here. But if the markets continue to fall or they start to sell off, I imagine this is going to have a pretty decent little move to the downside. So a nice bear to keep on your list. So the Triple Witching Friday, which had the volume, and I know that volume it's subjective, especially to a triple or quadruple witching day. But the push lower, the candlestick itself looked very neat. It's something that would be pretty cool to confirm a bear, but no follow through so far. And I imagine it's because Monday's action today looked like it was going to, but if it wasn't for what was coming out tomorrow, I don't know if we would have got that hammer. Now, if the hammer was going to happen anyways, then whatever the Fed says would have made a difference, and we will move higher. So just stay patient, wait for the confirmation in either direction. It's a very difficult thing to do. But it's the best thing to do. So the FOMC statement, I don't think that's going to be a big deal. I think they stay in line. It's the outlook moving forward, the Fed speak after. So when we do get that announcement, the number, make sure you guys understand that's not what the market's waiting for. It's going to be after the Fed talks, and then there's going to be a little bit of, now what did he say? And then I think towards maybe the end of the day, we might get our first inkling of where these markets want to go. Be patient. Check your potential trades for earnings as always, but I do think that the big one is going to be the Fed. Thanks, guys, for joining me. We'll talk to you next time.